Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Russian steel producer Severstal expects domestic demand to fall by 5% to 7% in 2020 compared to 2019 as a result of the coronavirus outbreak, but says increased exports have allowed it to keep producing to capacity. Chief Financial Officer Alexei Kolachenko said in an interview the second quarter would be the toughest as the coronavirus impact was most severe, ahead of a second-half recovery. Already, he said business was improving in June although domestic steel demand is 17% weaker than a year ago.
Russia's grain exports will not be subjected to any quotas from July to December, the Agriculture Ministry said on Tuesday, citing its initial plan. The ministry, however, said it plans to impose grain export quotas in the second half of the season, which runs from January to June 2021, in order to ensure that the domestic market is adequately supplied. The ministry's comments, which came in response to questions from Reuters, did not contain estimated figures for these quotas. The ministry said it would meet grain exporters this week, where it will disclose its preliminary forecast for 2020/21 grain exports. It said it would determine its forecast after the end of the harvest. Russia, the world's biggest wheat exporter, had set a quota for grain exports of 7 million tons for April through June following an outbreak of the novel coronavirus which has so far infected more than 500,000 people in the country. But the country's online grain export quota ran out rapidly at the end of April as traders rushed to secure customs documents for shipments in May and June, data from the ministry showed.
Moving on to the top news in the energy sector.
Global gas inventory has swollen as demand for liquefied natural gas, LNG, is slow to recover, and fears of a second wave of the coronavirus outbreak are adding to caution as economies restart. Dozens of LNG tankers are idling as gas storage tanks become full in countries such as Japan, South Korea and in Europe, trade and shipping sources said. Gas demand in top LNG importer Japan has been weak as COVID-19, the disease caused by the novel coronavirus, forced hotels and restaurants to shut, and as factories suspend operations. Gas sales in the commercial segment fell by up to 50% in May from a year earlier, while gas sales for the industrial segment slid by 20% to 30%.
We will now take a look at some of the price moves in the agricultural market.
Chicago corn futures ended slightly lower on Tuesday after a day of positive trading after the U.S. Department of Agriculture (USDA) reported decreased crop conditions due to recent hot weather across the western Corn Belt. Wheat slid as winter harvests continue, while soybeans remained lower as weak soymeal trade overwhelmed gains in soy oil. Chicago Board of Trade most active corn fell 1/4 cent to $3.29 a bushel after hitting $3.34 -1/2, its highest since June 8. Wheat fell 8 - cents to $4.96 a bushel, the biggest single-day drop since May 13. Soybeans fell 2 cents to $8.67 a bushel.
ICE raw sugar futures rose on Tuesday as oil prices firmed, and a global stocks rally resumed, reducing excess production fears. Coffee resumed a downward trend, while cocoa headed higher. July raw sugar SBC1 rose 0.15 cents, or 1.3%, to 12.19 cents per pound at 14:35 GMT. September Arabica coffee KCC2 fell 1 cent, or 1%, to 94.85 cents per pound, having hit a 9-month low of 94.55 cents on Monday. September London cocoa LCECC2 rose 15 pounds, or 0.9%, to £1,715 per tonne, having hit a 9-1/2-month low of £1,684 on Monday on worries over demand.
Next is price moves for metals.
Copper prices climbed on Tuesday as the Federal Reserve's latest move to provide further support for the U.S. economy helped to boost sentiment, but gains were capped by worries about prospects for demand in top consumer China. Benchmark copper CMCU3 on the London Metal Exchange was up 0.3% at $5,722 a ton at 16:04 GMT from an earlier high of $5,836 a ton. prices of the metal used to make products widely used in the power and construction industries last week rose to $5,928 a ton, the highest since January 24 and a 35% increase since the middle of March.
Moving on to energy price news.
U.S. natural gas futures fell over 3% to a two-month low on Tuesday as output slowly edges higher while liquefied natural gas exports remain low. Front-month gas futures fell 5.5 cents, or 3.3%, to settle at $1.614 per million British thermal units, their lowest since April 15. Refinitiv said production in the lower 48 U.S. states averages just 87.5 billion cubic feet per day in June, down from a 16-month low of 88.2 bcfd in May and an all-time monthly high of 95.4 bcfd in November. But on a daily basis, output rose to 88.3 bcfd on Monday from a 19-month low of 85.7 bcfd in late May.
Oil prices rose 3% in volatile trade on Tuesday as Wall Street surged and the International Energy Agency, IEA, increased its oil demand forecast for 2020, but gains were capped by worries about a second wave of coronavirus cases. Brent crude futures LCOC1 ended the session up $1.24, or 3.1%, at $40.96 a barrel, while U.S. West Texas Intermediate crude WTI CLC1 rose $1.26, or 3.4%, to settle at $38.38 a barrel. Oil prices were bolstered early in the session as U.S. stocks opened higher after a record increase in May retail sales revived hopes of a swift post-pandemic economic rebound, with sentiment also lifted by data showing reduced COVID-19 death rates in a trial of a generic steroid drug.
Finally, we will look at the most recent USD index.
The dollar gained on Tuesday after a record increase in U.S. retail sales in May after 2 straight months of declines, reinforcing a growing belief that the worst may be over for the world's largest economy. The U.S. currency turned positive against the yen after the data, while the euro hit session lows versus the greenback. Tuesday's data showed U.S. retail sales jumped 17.7% last month, the biggest rise since the government started tracking the series in 1992. Data for April was revised to show a record 14.7% drop in sales instead of the previously reported 16.2%. Economists polled by Reuters had forecast retail sales would rise 8% in May.
That is all for today's news on the commodity market. Stay tuned to TradeFlow TV if we continue to provide you with more daily updates.
This communication has been sent to you by TradeFlow Capital. This communication has been prepared for the information of TradeFlow's clients and is not directed at retail clients or those in a jurisdiction in which this distribution may be restricted by local regulation or law. The pricing contained within this communication is indicative only, it neither intends to express the terms of any contract, financial product or transaction nor does it aim to notify you of any possible risks in undertaking such a transaction. This communication should not be construed as an investment or trading recommendation nor is it intended to be an offer to buy or sell any transaction, securities or investment. OTC derivatives typically involve a high degree of risk and are not necessarily suitable for everyone. As the circumstances of each person differ, you should not rely on this document to make an investment decision and should seek your own independent advice. The views expressed are those of TradeFlow at the time this communication was prepared and are subject to change without notice. Information on past performance is no guarantee of future performance. Forward-looking statements may be based on our opinions or projections and actual results could therefore differ materially. This communication is a marketing material. It has not been prepared in accordance with the legal requirements designed to promote the independence of investment research and is not subject to any prohibition on dealing ahead of dissemination of investment research. This communication has been prepared in accordance with the FCA rules relating to financial promotions. However, TradeFlow give no warranty in respect of the accuracy of this information and accept no liability for any loss howsoever arising as a result of a person acting on this information. The content of this communication is confidential and for the intended recipient only and should not be copied, distributed or disclosed in whole or part without TradeFlow's prior consent. If you no longer wish to receive these communications, please contact the sender of this report with your request to be removed from TradeFlow's mailing list.